So this is gonna be a real quick video, but thought I should make it since it's my first week down after starting this portfolio. Now, I don't know why the market decides to react when it reacts. You just make your plays when you make them. Unfortunately, I was already in these plays since the beginning of the week, so I got caught in the middle of them. So today, we're down, what was it, 3% or something like that? Yeah, 3%. Still going down after market. For the week, like I said, it's the first week I was down, so the start of the week was fine. Then Donald Trump does what Donald Trump does, and we just start plummeting. But it's all good. I mean, we're not doing nothing but just selling puts on TQQQ, which is 3x leverage of the QQQ. So just started this portfolio, and like I said, it's the first week down. So thought I'll make this quick video, but here's the plays I have right now. So it looks like we're down a lot more than what we are just because, the expiration dates, but all that usually means is you can buy the plays I have at a much better price. So it doesn't necessarily mean I'm going to be down by the end of the week, or should I say by the end of next week. And as you know, we can always roll over. So I got what, three of them expiring next Friday, April 2nd. Then I got a May 1st call, which I was just testing out something, so I'm already down on that one. And then I got another April 2nd put at 38 strike price. So really, next week, if we bounce up to 42.5, then all these will expire worthless, which means I get to keep my money. I probably won't let any of them get assigned like this one. So I didn't make a video for it, but I was assigned one at the 50 strike price. But because my dollar cost average was so low, it was actually averaged down to $45 instead of 50. So last week this was fine. I could have sold out of it, but of course I didn't because I was just gonna hold it, maybe till it actually gets to the 50 strike and then sell it to where it originally would have been. So technically, there's only shares that I'll hold, 115 of them, and right now we are down 300 bucks. Or no, that was for today. Total down 765, which is the biggest chunk from this down total. And then I got another or two more Mays that expire. So these are far out. Got $700 for this one, $563 for this one. Assuming it all plays well, that'll be an extra bump to my portfolio. If I gotta roll them over, I guess come May 1st we'll know. But it's a long ways away. We're still not even in April. So these are my immediate ones that I care about. Again, I don't gotta do nothing till Thursday. Thursday I'll come back and look at everything, see where we're at, see if we gotta roll over anything. But I'm only doing the indices, so very safe to me. I mean, even better would be like doing the SPY or the actual QQQ, but I don't got $63,000 to do it, which is the minimum I'll need just to buy one contract for SPY. But it's pretty much it. Obviously I'm not using no margin. Seeing zero use. Probably won't ever use margin just because it don't allow me to use it for selling puts. If it does, then that would be wonderful. But in order to do that, you need a $100,000 account, and Robinhood doesn't even allow for margined accounts, margin full accounts where you can sell naked puts. At least I don't think they do. Either way, I ain't gonna be finding out anytime soon. So, quick update. First time down in the account after just having a smooth ride before with all the war news. We were still riding smooth, and then this week with the troops, quote unquote, being deployed. So I think that was the biggest hurdle that we got to get over. Whether we do it or not, that's not what people care about. So come this weekend, see what happens again with the war. But other than that, that's all I got for you.